Alright, let's get into it. So, nothing special today. Let's recap what went right, what went wrong, and where we can see improvement. We are making slow but steady improvements within our trading. Slow progress is better than no progress. So, I'll take where we are compared to where we were 2 weeks ago. Anyways, let's start on the daily time frame. What did we see price action doing? The night prior, we didn't mark out, bam, this strong liquidity and how we swept out these daily highs right here. And then we also marked out on the 4 hour time frame. This 4 hour low we had displaced below. I wanted to see if we would continue lower. Clearly, you can see we did. We retraced for this micro or this small 4 hour imbalance, validated it, then did what? Began to push the downside on the hourly time frame, also validating bearish hourly confluence. Now, you've seen we were looking for longs. We did end up originally looking for short positions. I'm sorry. We did end up originally looking for short positions on the day. However, there was something we went in and journaled that I'll show you guys right here. I'm trying to find it. It was mentioning liquidity sweep and us trading against trend. Let's find it. It should be somewhere right here. Right here. Okay. So do not confuse random breaks of structure with market structure shift. Market structure shift is when price action changes direction. How do you not confuse them? And I want to use market structure shift showcase after liquidity sweep and or a price action retracement is made. The micro time frame will begin to change structure back to the upside and or downside in order to showcase a validation of that bias. Now, we know this is the market structure shift. This is the definition of the market structure shift. So, right here, we were solely looking to implement and see. Let me see if I can find it. This right here. Not reacting to liquidity sweep and trading against basically us sweeping out liquidity and having a tendency to trade against it wasn't a good habit. So one thing I wrote down was that I wanted to go in and solely execute right here following price action following liquidity, if that makes sense. So right here I wrote, start with looking to follow liquidity. What does this mean? If we understand our bias, follow that bias until we sweep out the next draws on liquidity. Once we do, look for the proper market structure shift confluence in order to validate if we are reacting to that liquidity being swept. Example, if we sweep out source liquidity, don't immediately switch bias. Look for things that and probabilities that would begin to validate bullish confluence after sweeping out sell side. After you remember, you should not be forcing a bias. You should be reacting to price action movements. So in simple terms, one thing I wanted to kind of test was us sweeping out liquidity and immediately reacting to that liquidity being swept. I had times in the past where we would, for example, sweep out buy side liquidity, and instead of switching to bearish as I know I should, I would continue bullish and I'd get stopped out. So the one thing I was trying to and will continue to do is react to price action as soon as we sweep out liquidity. But remember, that says react. That doesn't mean force a bias. The reason why I was bullish, I did not check the 15-minute time frame for the proper confluence. To be honest, it was a good trade. great trade on the lower time frame, but not a good trade as a whole. We'll get into that in a second. So 15-minute displays to the downside. Cool, we're bearish. We had our draw on liquidity right down here. You could see ever since we swept this out, we've just been chop, chop, chop. That was our draw on liquidity on the daily time frame. When we scale down to the 5-minute time frame, I originally wanted to see a retracement somewhere up here in order to short and target this draw on liquidity down here. Never seen that. Price action just kept liquidating. We got this 5-minute retracement that we noticed push back to the downside. Then this is where our entry got filled. Right here you see us. We began to make the push back to the upside on ES. We had swept out a 4-hour, made a 4-hour retracement right here and swept out this 4-hour draw liquidity we were also targeting. So I thought ES and NQ were forming an SMT with 4-hour on ES having taken out lows and 4-hour on NQ having not yet taken out lows. We also swept out the liquidity and made the 4-hour retracement on ES. This is where things got messy. I had an execution open for NQ. If I go to the 1-minute time frame, you guys will see exactly what I executed on. Our executions have been getting better, which is good. A lot more cleaner. You can begin to understand why we're executing on the micro time frame, but definitely a whole lot cleaner after the market structure shift to the upside. Waited for this retracement within this inverse and regular fair value gap, seen that. However, after making this slight push to the upside, I didn't think we would get this. The reason why was because ES was the lagging, was the pair that was lagging. So, with the SMT, so I thought, okay, well, price action has no reason to retrace on NQ. Let's just execute on ES. This is when I went in with 3 micros on ES, but I also had my entry on on NQ. Sorry, my brain's a little slow. I woke from a quick nap. So I got filled on both orders. Had no idea about my NQ one, so I ended up taking a slightly larger loss of $200, more than I wanted to on the day. But yeah, once ES got stopped out, I knew, okay, there was something wrong happening within here. Our execution was amazing, but we were trading against trend. We made that mistake again. What did we do wrong? And it was as simple as, and this was for both pairs, I'm just showing NQ, because this was the original trade idea. All we did was make that retracement for the 15-minute. So how could we have avoided this loss? Literally by looking at the 15-minute. We looked at every single time frame. It's hilarious besides the 15-minute. Look, or yeah. We have the 5-minute when we were looking to execute, the 1-minute, the hourly when we were looking to execute, the 4-hour, and then the one time frame we did not look at all. You could see we formed this fair value gap. This is when we were looking to execute. It just wasn't. These screenshots are from market open. We totally discarded it. So that was definitely a huge mistake on our part. We came up, took this out, then made the push to the downside. Still didn't have a trade entry for today. We have definitely been improving because we've been a lot more strict with our trade entries, and now we actually understand what we're looking for. We're slowly getting better at executing day after day. Obviously, this is the 8th losing trade. If you want to consider it that, I mean, it depends how you want to consider it. You consider it, oh, Lonnie's on an 8-trade losing streak, but guess what? Lonnie don't really care, so you shouldn't really care. It's never about losing streak, winning streak. It's about just learning. If you can do that, then guess what? Everything will figure itself out because you decided to figure it out. It's as simple as that. So I hope for more losers, actually. I hope for more losers until I completely understand how to properly react to price action, how to continue to follow it, and how to understand my proper confluences, um, showcasing to me when to follow it and when we're switching. This one, where we could have improved, was wait for the actual draw and liquidity to get swept out, the final one, not just this other one we had over here, but waiting for our main one on the daily time frame to get swept out before looking for longs, and having seen the 15-minute fair value bearish fair value gap that we validated. If we would have done that, this trade totally would have been avoided. Still, good trading day. I would probably give it. I have hiccups now. Hold up. What am I, a woman? Real men don't get hiccups. I'd probably rate it 3 stars out of 5, mainly because of these two components. If these two components weren't there and we did end up taking that loss, or this 15-minute wasn't there, it would be around a 3.5. Us having not swept out this drawn liquidity definitely made a difference. So just want to recap that with you guys. What we're looking to improve on next is still focusing on this. However, analyzing the proper confluence that lets us know this. I guess it's literally what we wrote down. It was just our mistake of not executing at the proper time after we swept out liquidity, and then going in and ensuring that we do what? That we have the exact same execution over and over and over again, which we go to here. At least we can see the replication within the trade setup. That's all that matters to me. You can see right here, if I put them side by side. Bam. Came down, took out liquidity. Right here. Bam, bam, came down, took out liquidity. Obviously, there was accumulation before this. There was none over here. So that would have given us also an extra confluence. But you can see our executions are getting better, way better compared to what these were before. And this isn't even anything. And the previous market conditions we used to execute on. So don't think you're not progressing because you're not taking wins, or you're not, blah, 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 or you're in a losing streak, whatever you want to call it, or you're not funded. No, that's not what showcases progressive learning. You actually comparing where you were last week, your education last week compared to this week, is what showcases it. I know I'm growing within my trading because I can literally see real time the improvement within my trade execution, my trading mindset, and my trading approach. It's that simple, so don't overcomplicate it. Love you guys. Peace.